Gold just dropped 8% in 1 hour. That's not a headline. That's a signal. Gold is supposed to be boring, slow, heavy, predictable. It's the asset people hide in when the world feels unstable. So when gold starts moving like crypto, something important has already changed. An 8% drop in 60 minutes isn't normal behavior for a safe haven. It doesn't mean gold is dead, but it does mean the market using gold right now is not calm. This move didn't start with fundamentals. No mine collapsed. No central bank announced a reversal. No long-term thesis suddenly broke. What broke was positioning. Over the last year, gold wasn't rising quietly. It was accelerating. Fear pushed money in. Speculation amplified it. Leverage crept in silently. And when leverage meets uncertainty, price doesn't adjust. It snaps. This is how late-phase markets behave, not just in gold, in everything. At the same time, stocks are near all-time highs. The dollar has been weakening. The Swiss franc has been strengthening. Gold surged to levels that felt obvious. Those things aren't supposed to happen together. When they do, it means stress is leaking into the system. Even if headlines say everything's fine. People ask, is this the top for gold? That's the wrong question. And the right question is, why is gold no longer acting like insurance? And insurance doesn't gap down 8% in an hour. Insurance doesn't liquidate itself. Insurance doesn't care about margin calls. What we're seeing isn't a collapse of gold's role. It's a distortion of it. Too much capital is chasing protection too late. Too many participants are treating gold as a trade, not a hedge. And when fear turns into crowd behavior, even safe assets become unstable. This doesn't mean the world is suddenly safe again. It means uncertainty is high enough that even fear is being traded. In previous crises, there was a clear escape route. Crisis hits, money runs into dollars, then into U.S. treasuries, then everything stabilizes. This time is different. The dollar itself is under pressure. Trust in policy is fragile. Debt levels are historic. Predictability is gone. So capital doesn't know where to hide. It jumps from one shelter to another. Gold, francs, short-term trades. And that makes every shelter noisier. So volatility is the message here, not direction. When gold starts behaving like a risk asset, it's telling you something about the system. Why? Not about the metal. It says liquidity is nervous. It says positioning is crowded. It says confidence is thin. This is not the moment when markets collapse. It's the moment when they stop being trustworthy. And that's always more dangerous. For long-term holders, this isn't panic time. For short-term buyers, it's a warning. Buying safety after it already moved is how people discover risk the hard way. Gold at 5,000 wasn't confidence. It was tension. And an 8% drop in an hour is the system briefly exhaling. Not relief, just a reminder. This is not a world of safe assets anymore. Only safer decisions.